brought to you by Rio 2.
Peter Schiff, welcome back.
Oh, well, thanks for having me back on again.
No more than work. Look, the news came through obviously about the subpoena yesterday. As soon as I read the Bloomberg report, I thought, Jesus, I really want to know what Peter Schiff thinks about this. So thanks for coming back on. Look, first thoughts in terms of I actually watched a bit of your show last night, and I thought you explained really well in terms of, even though this might be Powell's last year as Fed chair, it doesn't necessarily mean that it's his last year with voting rights, and that sort of then starts making sense of it. I mean, what's the way that you're looking at this in terms of the change of 2026, perhaps before this happened?
Well, first of all, it's been inevitable that eventually you might have this type of a clash between the Fed and the government, the president, because the Fed has been enabling all the deficit spending and all the profligacy of both parties for decades now. Um, and recently their excuse was that, well, we're below 2% inflation target, so we can print money, we can create inflation because the rate's too low. We need to move it up to the target. But, now that the rate is well above their so-called target, we got the CPI out again today for December, 2.7. We're further above 2% than we were really ever below it. And when we were below it by point 0.7, it was, oh my God, we need QE, we need 0% interest rates. This is potentially a catastrophe. We don't have enough inflation. But the Fed is cutting rates now, even though we're as much above 2% as we were below. And again, I don't put a lot of stock in the government measures. I think what's happening in gold and silver is a lot better indicator of where inflation is headed than the backward-looking, highly rigged government numbers. But at this point, the Fed really needs to raise interest rates, not, that it's not cutting them enough. They need to go up. But the problem is the government can't afford the higher rates. And that's the predicament that we're in as a nation. And that's the dilemma that I always knew was coming, which is choosing, how you want to die. Do you want to die by inflation, or do you want to die by financial crisis? Either there's going to be a default or there's going to be massive inflation. And, politically, it always seemed like the latter was the most expedient path. And that's obviously where we're headed. And, maybe the Fed is somewhat reluctant. Powell is a bit reluctant to do that. But that's what's going to happen, and it's not just the government that's all levered up, but it's the voting public. People have a lot of debt, and they need lower rates. But the problem is rates are already too low, and now you're starting to see that in gold and silver. Soon you're going to see it in the foreign exchange and the bond market, meaning that you're going to see a big move down in the dollar relative to other fiat currencies, and you're going to see a big move down in the long end of the yield curve, which of course is going to prompt the Fed to get even more aggressive in the inflation creation to try to put a lid on longer term interest rates. And that's when the bottom will drop out of the dollar. And, if you think gold and silver prices are going up fast now, wait do you see how much faster they're going to be going up.
Yeah, but in terms of this subpoena on the Fed and essentially on Powell, it's like you said, obviously it is political. It's not because they've overspent on on the building by the looks of it. I mean, I'd be very surprised if that was the real motivation behind it.
Ironically, they're going after him not for the building. It's for lying to Congress about the renovation. So it's basically, for lying, which, I mean, they all lie. Everybody in Congress lies. The president lies. In fact, when the president was asked about this investigation of Powell, he said he didn't know anything about it, which of course was a lie. There's no way that he doesn't know about this investigation. In fact, there's no way that he's not the one behind it. So it's ridiculous to say we're going to, charge Powell for lying. I mean, all these guys do is lie, and they lie about much more important things than the elevators in their building and how much they spent on them, or whatever, the executive bathroom. Um, so yes, Powell is correct. It's all a pretense, just like with Lisa Cook. It wasn't about mortgage fraud. It was about getting rid of her. Not that she was this, huge hawk, but Trump just wants to make sure that his flunkies are in control of the Federal Open Market Committee. He wants to basically pack the FOMC the way Roosevelt wanted to pack the Supreme Court. He wants the Fed to be far more aggressive in creating inflation than they would be, if left to, on their own.
We spoke of, I think it was around 4 or 5 months ago, and we spoke about this shift from obviously long-term debt is becoming too expensive. We're now starting to see a bit more of reliance on short-term borrowing. The Fed have reduced rates last year at the back of last year. I mean, how much lower do you think Trump wants them before he's happy? Because the trend was that they were
Well, he
reducing
wants
anyway.
them. He probably wants something, maybe 1%. I mean, he says interest rates should be a lot lower, not like, a couple of extra 25 basis point cuts. He wants to really goose the economy and goose the stock market because he wants to take credit for it. Right? He doesn't want an economic downturn, recession. He doesn't want a bear market. And he wants to try to do something about affordability. So he wants to bring down mortgage rates or credit card interest rates. But the irony of it is everything that the Fed, or he wants the Fed to do to lower interest rates, will end up raising the cost of living, because the only way the Fed can lower rates is by creating inflation. And ultimately, not only does inflation push up consumer prices, it's going to push up interest rates.
Yeah. Well, and also all but in name, we are starting to see a return of QE as well, which is something that you've been highlighting over the last few months, right?
Well, we're basically back to QE. I mean, the Fed announced that. They just didn't call it QE. They said we have to manage our balance sheet, and so they're buying treasuries. And now you have Donald Trump ordered Fannie and Freddie to start buying mortgages. So we're getting it, right? The Fed is buying treasuries. The GSEs are buying mortgages. This is just the beginning, and they're going to be cranking it up as there's more pressure to do it.
What does this do to confidence in the dollar? I mean, we're seeing gold at all-time highs again. Well, I mean, silver's just absolutely on a tear. It seems like silver's going to be heading towards 100, if not this week at some
It's
point.
at 89 right now. I mean, we're only $11 away from 100. I mean, we were $11 lower a week ago. I mean, you could have bought silver. It pulled back to like 70, 71, less than 2 weeks ago. And now it's, 89. But I mean, I don't think silver is going to stop at 100. I think that you could see by the end of the year, $200 silver, and gold could be getting close to 10,000.
Really, by the end. So you're looking. Are you looking at that as the value of the dollar is going to drop by 50% over the next 12 months, and therefore?
Well, again, it could drop by 50% against gold. It may not drop by 50% against the euro. But I think if we get a break in the dollar, if the dollar index, which is right now, 98, 99, if we break down to about 70 by the end of the year, yeah, we can easily see gold. I don't know if gold will hit 10,000 this year. It may not. It may take till next year, but I mean, it's going there. But silver, silver could hit 200 before gold hits 10,000.
I mean, Trump's obviously come out pretty strong in the new year. He's what he's done in Venezuela, the talk about Greenland, obviously what's going on in Iran as well, and he's interruption there in terms of what he may or may not do, and then we've obviously just seen this subpoena on the Fed. It's a really strong 2 weeks out of the new year. I mean, if he's going to continue like this for the rest of the year, it sets it up for a pretty turbulent time. How are you reading the rest of? I mean, does this change your outlook massively, even just these 2 weeks, in terms of what 2026 looks like?
I mean, my outlook is pretty much the same as it was for 2025 when it comes to the precious metals, continued higher. I think the dollar should be weaker in 2026 than it was in 2025 because we only had weakness in the first half of the year. The dollar kind of stabilized and bounced back a bit. And I also think we'll see more weakness in the bond market, unless, of course, the Fed comes in with an aggressive QE program or steps up what they got now, and that might slow the rate of rise of bond yields, but it will accelerate the move up in gold and silver and the move down in the dollar.
How do you see the difference between, so Europe, for example, at the moment, most countries in Europe, their growth rates are anywhere between 0.1%, maybe 0.5%. Uh, if maybe not Poland or places like that, but most of Western Europe, if you look at France, you look at the UK, you look at Germany, the growth rates are just next to nothing. They're in the same debt trap really that the US is in, but they just don't have the growth. Whereas the US does have the growth numbers, 4.3% in the third quarter of last year. Is that a potentially a saving grace for the US versus Europe?
I don't really believe the growth numbers. I think we understate our inflation rate, so I think that the actual real growth is lower. But a lot of that too is being driven by this over investment in AI. And then, you have the consumer that has really dipped into what's left of their shallow savings pool. So we've had a collapse in the savings rate. And so we've had a lot of excess spending. And of course, the government, we have massive deficit spending. So this is not real economic growth. I think this is just, a precursor to a big recession. We're just bringing forward a lot of spending and consumption out of the future into the present.
In the heart of Chile's Atacama Desert lies one of the largest gold oxide deposits on Earth, weighing in at an impressive 4.8 million ounces in measured and indicated resources. This is the largest, permitted, fully funded gold heap leach project in the Americas. Rio 2 Limited is bringing the Phoenix Gold Project into production. Construction is nearing completion, on time and on budget, with first gold pour scheduled for January 2026, just weeks away. Phase 1 starts with 20,000 tons per day, delivering approximately 100,000 gold ounces per year at an ultra-low, all-in sustaining cost of just $1,237 an ounce. In today's record gold market, that's thousands of dollars in cash margin on every ounce produced. Rio 2 will also undertake a pre-feasibility study for a potential Phase 2 expansion. This will assess the full potential of scaling the mine to 80,000 tons per day, with the view of producing at least 300,000 ounces annually for 10 years, starting in 2030, making this a near-term, massive free cash flow company with even bigger aspirations and margins in sight. From one of the safest, most mining-friendly countries in the world, delivered responsibly by a team that's done this before. Be a part of it. Visit rio2.com today.
And something that you mentioned when you were on the show last time was this idea that if the long-term rates are too expensive, you load up on the short-term borrowing, the sort of 6 month, 1 year. If inflation then gets out of control and you have to then raise rates and you've got loaded up on all this short-term borrowing, the US is in a bit of a state. It seems like that's the plan, isn't it? That the US are now going to have to load up on the short-term end of the curve. Is that not the way we're meant to be reading this?
Well, I mean, their plan is probably going to be to go down the curve because they need to bring down the long term rates if they want to bring down mortgage rates, for example. But most of what the Fed is doing now, right, is in the short end. They're buying treasuries. They're trying to keep the short end down, and that's where the government is issuing uh, the vast majority of its new debt. So we've got like a $3 trillion national budget deficit now, and that's being financed with short-term money. They're not going and selling 30-year bonds or even 10-year bonds. They're out there in the short-term market trying to finance, these obligations, which is obviously going to blow up at some point. Because if the Fed is forced to jack up short-term interest rates, like Volcker did, where they went to 20%, imagine if they just went to 10%, half of where they went under Volcker, even though they should go even higher than they did back then. We're in much worse fiscal shape now, and we have a much bigger inflation problem. So if rates went to 20% in 1980, God knows how high they'd have to go now. But the problem is we could afford 20% in 1980. We can't afford half of that now. I mean, not even close to half of that.
Why subpoena Powell? Because he's agreed to essentially do this QE that you were talking about earlier in terms of short-term borrowing. He's reduced rates, obviously maybe not as fast as what Trump wants, but the Fed's pretty much still moving in the same direction that Trump wants it to in the last 6 months.
Yeah. Well, I mean, remember, Trump is basically using the Fed as a scapegoat. And if the Supreme Court strikes down as tariffs, which they should, he'll use the Supreme Court as a scapegoat. Because, the economy is actually weak, even though he goes around the country telling everybody how hot it is. It's actually pretty cool. And it's going to get a lot colder. And he needs somebody to blame. And so the Fed is a perfect scapegoat for that. And Powell is, the face of it. So a lot of it is just to try to show, look, he's a bad guy. We got to get rid of him. He's hurting the economy, and if things go wrong, we can just blame it on Powell.
Obviously, I was just asking about this growth disparity between the US and Europe, and I think you're right there. One of the big things that Europe doesn't have due to over-regulating is the AI boom that the US has right now. I said this on the channel the other day, actually. It seems to me like we're almost in a Cold War between the US and China in terms of this AI race, similar to the space race with Russia back in the 60s, sort of what it feels like a little bit. If there's so much invested into this AI boom, is it already becoming too big to fail? Are we getting into bailout territory on AI companies as we start seeing it integrate with actual workplace?
Look, I mean, we don't even know how much of this AI investment is going to end up being viable. I mean, maybe the technology that is being bought will be obsolete soon, and there'll be something a lot better, maybe even a lot cheaper. I don't know. But that's where a lot of the GDP growth is coming from. It's all of this AI spending. But obviously, if we're spending on AI, we're not spending on something else. I mean, the money has to come from somewhere to pay for it. And, so I think that we're going to find out where we underinvested, and that's going to end up being problematic.
Where does this lead to? I mean, you're talking about this $3 trillion deficit. Essentially, the US can't afford to up interest rates to 10%. They don't seem as though that they're committed to reducing the deficit. All roads lead to QE and essentially a devaluation of the dollar and less purchasing power, doesn't it? I mean, there's no other real sane way to look at this, is there?
Yeah, of course. And, the gold and silver are getting ahead of that. They're forward looking. The dollar is going to be debased. They're going to print a lot of money, and that money is going to lose most of its value. And the foreign central banks obviously were able to see this, and they started accumulating a lot of gold a couple of years ago, and they're continuing to buy. The public is now waking up. They're buying silver. So, you're going to see more and more money fleeing the fiat dollar-based system into real money. And it's interesting that, the money's not going into Bitcoin. So it looks like that bubble has gotten a bunch of holes in it now. And I think the Bitcoin is digital gold false narrative is going to be deflating.
Yeah, I read someone commented a little while ago that it's digitalized energy Bitcoin, which I just don't think makes any sense.
Well, it's not digitalized energy because you can't use it to power anything. It's not like it's a battery. People get confused. You consume energy to solve the mathematical equation that generates Bitcoin. But just because you use up energy to create Bitcoin doesn't mean that the Bitcoin somehow represents that energy. No, the energy is gone. You can't get it back.
Well, exactly. Other than gold and silver, are there any other places that when a currency like the dollar begins to erode away and the value of it or the purchasing power of it just continues to fall, obviously you don't really
to a lesser extent, you can buy higher quality fiat currencies. That's why the dollar is just a percent or so away from an all-time record low against the Swiss franc. I mean, it's clear that, when it comes to fiat currencies, the Swiss franc is not as bad as the dollar. And so that's why the dollar is losing ground to the Swiss franc. But the Swiss franc is not as good as gold. That's why the Swiss franc is going down relative to gold. It's just going down a little bit less than the dollar.
It's funny how during COVID, I mean, what was it, 5 years ago now? The US, or the most common phrase I remember from that time period was that the dollar was the least dirty shirt among all of them. Would you say it's probably the dirtiest shirt now in a 5-year
Well, I don't
period?
know that it's the dirtiest. There's some pretty dirty shirts in the fiat currency hamper. But when they use that analogy of the dollar being the cleanest shirt in the hamper, it was to say that there was no alternative. That look, the world is stuck with the dollar because everything else is worse, right? And I always pointed out, no, gold is an alternative, and gold is not in the hamper at all. And so people that were thinking that the dollar's reign as the reserve currency was safe because no other currencies were good enough to take its place. My point was, we don't need another currency. We need real money. We need gold to replace the dollar. And that is exactly what is happening.
Yeah, no, I agree. What do you think about the idea of the one being gold back at some point in the future?
It probably will be. Whether it's going to be convertible, redeemable in gold, we'll see. But I think that it's going to be backed up by gold reserves rather than U.S. dollar reserves.
Yeah, because I don't know if you agree with this, but it's a lot of commentators who have looked at the gold inflows into China, obviously the amount that they mine themselves, the largest producer in the world, etc.
Look, and a lot of gold is leaving the U.S. Look, we had a big drop in our trade deficit last month because of gold exports.
Wow. But some people theorize that China have around 3 to 10 times the amount of gold that the US has, and they're obviously just not disclosing it.
I don't know. I mean, it's hard to say. I'm sure China has more gold than they let on. Whether they have that much, it's hard. But it's also possible we have less than we claim. We haven't had an audit in a long time, so who the hell knows? I know what's supposed to be there, but is it actually there? When Trump first came into office, there was a lot of noise about let's audit Fort Knox. Let's see how much gold we have. Well, they haven't talked about that in many, many months. They kind of put the kibosh on that. And maybe it's because they found out somehow that it ain't there.
I was going to say, why do you think it's gone so quiet? Do you think that could be the case? That it just
Yeah,
isn't
look,
there?
I think that obviously there's a risk that the gold is not all there. We know maybe it's been leased out, or I don't know, or it's been sold. But they don't talk about it anymore. So why else would they have shut up about it?
Yeah, because they were pretty gung ho about doing it. It was almost you like the bros are going in to sort it out, and it never happened. So it went quiet. I think
Yeah, I think they realize that there's no upside because everybody assumes the gold is there. So if it is there, well, that's what everybody thinks. But if it's not there, that's a big problem. And so why, risk letting that cat out of the bag, right?
the idea of, say, the US or countries in Europe ever going back onto the gold standard, it's pretty impossible, right? Because the way that you basically aren't allowed deficits when you're a gold standard. It just doesn't really work. You can't have this welfare state.
Well,
on a gold
look,
standard.
eventually, I think all the governments are going to have to be back on a gold standard because they're going to destroy the value of their currencies. And so how do you repair that? How do you reinstill confidence? How do you get, a money that the public can trust? It needs to be gold. I mean, you can't just wipe everybody out and then just say, here's a new fiat currency, take this one. Why is that any different than the last one that went to zero? So, you got to back it by something to create confidence that it's got real value.
Does the foreign policy side of things that we've seen this year, that even just at the beginning of this year, does this accelerate the timeline in any way as to, because it just seems like confidence is really slipping at the moment. We're seeing how far the dollar's slipped.
Well, I think it should be slipping, but it's not. There's a lot of complacency out there. Look at the bond market, look at the dollar. So But obviously, you can see it in the precious metals market, but only the precious metals market. Well, prices are going up too. I mean, copper hit a record high. So, it's not just precious metals, but it's all, and it's all the precious metals. There's platinum, palladium, everything is moving up. So I think the metals are more sensitive to increases in the perception of the inflation risk and a loss of confidence in the dollar than other markets might be. But those other markets will ultimately react to what the precious metals market has already sniffed out.
Do you put much thought into what you think the reaction of some of the sort of Asian countries might be off the back of the last 13 days? Is China going to start selling treasuries again in retaliation? Is there
They
anything?
should. I mean, they should sell treasuries just because it's a smart trade. Why own them? But yes, I mean, we've given the Chinese additional incentives to sell treasuries, as if they needed them, but we've given them to them.
From my understanding, obviously you really last year or the last few years you've loaded up more on the junior side of things. They're one of the later ones to move usually in these gold cycles.
Yeah, that's why our gold fund is a great buy right now. EPGIX is the no load symbol. We have a lot of juniors. We built these positions up over the years, and it'd be hard to accumulate those positions now in the kind of size that we got. So yeah, I think we have a lot of potential. I think a lot of those companies are going to get bought out. I think there's going to be a big consolidation in the industry, and the bigger companies are going to look to expand their reserves. Um, and the cheapest way to do that, the quickest way to do that, is to go to these smaller companies and buy them up, because a lot of the smaller companies don't even have the cash to develop their resources. But the big companies are going to be swimming in cash because they have substantial existing mining operations.
Yeah, no, they're already swimming in cash. I mean, some of the latest quarterlies.
And in the past, a lot of these small companies, the only way they can get financing was to hedge out their production. So they'd have to hedge gold, they'd have to hedge silver. But when they get bought out by the big companies, they're not going to demand hedges. They're not going to need the companies. They don't care. They have the cash. They're not worried about gold going down or silver going down like the bankers.
How do you allocate capital in a period like this, where obviously it does feel like we're still in the. It depends where you think we are, right? But most people that I speak to think we're still in the early stages of this bull market. Structurally, everything that's going wrong with this debt trap around the world and the lack of confidence, it doesn't feel as though anything's going to get better in the short term, and therefore that spells a pretty good thesis on gold and silver.
Yeah, I mean, obviously, we're not in the infancy here. We've had a big move up. I think we've kind of just recently broken out. I think last year was kind of really the breakout for the mining stocks and silver, and 2024 was the breakout for gold. So this new leg of this bull market, which has been ongoing. I mean, gold's been in a bull market since 1999, and it was under 300. But it consolidated from 2011 to 2024. So that was a long period to consolidate and form a base. So gold broke out in 2024, the miners broke out, and the silver broke out in 2025. So this is really the first year, 2026, where we have everything already broke out. We have the breakout in the precious metals, not just gold, but all the precious metals, because platinum didn't do that until this year also, right? It was a gold story in 2024, only gold. And it broadened out to the rest of the precious metals in 2025, and the mining stocks finally started to move. So I think this is the first year of what's going to be a big precious metals bull market. It's not the ground floor, but it's close enough compared to where we're going to end up, at the end of this thing.
Well, this is my big question. Is it does feel like this still has a long way to go, because I don't know. Can you foresee a scenario where confidence in the dollar, I don't know, does a complete U-turn and everyone starts piling in, or people want to own more treasuries, or central banks decide that they don't want to own gold anymore and they'd rather have US dollars or anything. Like,
I don't know. I don't know why they would decide that. I mean, I'm obviously I can't say that it's completely impossible, but I don't think it's very probable. And I don't know why, because our fiscal situation is only going to get worse. It's not going to get better. And with every passing day, it gets worse automatically. The size of our debt grows, the cost of servicing it grows. So if you're worried about the dollar today, you're going to be even more worried about it tomorrow. So I don't know why the trend would reverse. If anything, it will accelerate as more people who aren't currently worried start to worry, you know, and the people who have been worried, worry more. So that's the direction that I think we're headed in.
I actually agree with that. And even just going back to the beginning, if we were going to think out, say for example, this subpoena does go through, and the Fed is subpoenaed, and Fed's and Powell's removed, and obviously we do see Trump have 4 of the 7 that do the vote in his pocket down the line.
So if he's able to get 4 out of the 7 FOMC members in his pocket, which in order to do that, he needs Powell to step down, right? Um, Look, that's very dangerous. Because look, the Fed has been too political, even when it was pretending not to be. But when it's overt and they drop the pretense that there's any independence, it's going to be a big deal. And if the Fed was as reckless in the past when they were supposedly independent and not caving to political pressure, imagine how much more reckless they're going to be in the future. When they've admitted that they're doing what Trump wants, and Trump has made no bones about what he wants. He wants lower interest rates. That's it. That's it. I mean, he doesn't care about anything else. He wants lower rates. He wants cheap money. But he wants to pretend that he's against inflation. But of course, he's pro-inflation. He's advocating for more inflation without coming right out and saying it.
Well, but just by the nature of the actions that will happen, yeah, of course. At what point does the US become almost like we've always looked at, say, China, for example, where you don't really trust the numbers coming out, the politicization and control within government of all these different levers within the state? I mean, it seems like that's the direction in a way, even though it's meant to be a right-wing libertarian government, they're taking over more control.
I mean, people have to stop trusting the government numbers. I mean, remember, when those jobs reports came out and they fired the head of the BLS because they didn't like the report. But I haven't put any faith in government numbers for years now. I don't believe them.
But there's a contradiction there, don't you think, where this was supposed to be a government that or a presidency that essentially liberated the government, reduced the size of it, there was less controls that through the presidency. But if anything, obviously you've got to have the Department of Education go, but it doesn't really feel like that's happened, does it?
That was completely false. And I warned about that in advance. They made a big deal about Elon Musk and Doge, and they're going to cut government spending. And I said from the beginning that was BS. It wasn't going to happen. In fact, I had a lot of clients late, after Trump won that sold their gold stocks and, we're going to pay down the debt. And I was worried about debt and inflation, but now that, I'm not worried about it. And I said, you're making a huge mistake. This is all talk. They're not going to reduce anything. They're not going to cut anything. And of course, that's exactly what happened. I mean, Elon Musk had to pack up his bags and leave. And he was very, frustrated because he thought it was real. He didn't realize it was just all, cosmetics. It was all a show to pander to the libertarian vote of cutting government spending. Trump is a big spender. He's a Democrat. He's the real rhino. He accuses Thomas Massie of being the rhino. He's a socialist. He's a big government guy. He believes that government should control the economy. The government should, allocate capital. And he likes cheap money, so yeah, I mean, anybody who thought he was even a Ronald Reagan, hopefully by now they realize that's not the case. He's not even close. And he's certainly not a Ron Paul or anything like that. He's got much more in common with Bernie Sanders than Ron Paul.
Oh God, would it be nice to have a Ron Paul? Uh, just looking at I did ask you something that just leaning on from the fund side of things and how you invest in a scenario like this. Are you still piling in on the juniors? Because I just wonder. Obviously, we've seen this move on the majors. The mid tiers are doing quite well. The GDX is doing great. How are people positioning themselves? How are you positioning yourself within the fund, the gold fund? Is that still more of a focus on juniors?
we're still recommending that people buy. I mean, even though these stocks have gone up a lot in relation to how much gold and silver have gone up, they haven't gone up nearly enough. And I think that's just a function of a lack of confidence in it by investors in, the longevity of this bull market. I think there's a lot more fear than greed in the market, uh, you know, which is very healthy, early in a bull market. And it just means there's plenty of opportunities for people to buy these stocks. Yes, you're buying stocks that have doubled or tripled, but in many cases, they're actually cheaper than they were before they doubled or tripled. If you look at them based on their earnings and their future earnings.
Yeah, no, agreed. Peter, thank you so much. Where can people find more of what you do?
Yeah, people, obviously, if you want to get some physical gold and silver, especially silver, I've been telling people, we haven't run out, but we're having difficulty sourcing the product right now in silver. So I can tell you that the spreads are going to start to widen. So buy what you can while it's available. Your silver coins and bars at shiftgold.com. I have a new program called T Gold. You just go directly to tgold.com, which ultimately is going to be a platform for tokenized gold. But I'm going to be building it into an e-commerce platform where people can use gold as a medium of exchange and buy and sell in gold. So that's going to be big, I think, in the future as people really have to walk away from rapidly depreciating dollars and other fiat currencies. So set up an account. Right now it's just, buy the gold and silver we stored for you. The added functionality is coming. We're working on that now. In fact, right now I'm working on the apps, should be ready by next month. Right now it's just on the website that you go to T Gold, but we will have an app for that. Yeah, my mutual funds are available. The gold fund, my emerging market fund, value fund, my dividend pair fund was the number one fund in its category last year of foreign value. It was up, I think, 62%, just crushed everybody. But there's, it's still a good value. You can get all the information on my funds at the Europac website, above my shoulder, europac.com. And you can also talk to our advisors. We do separately managed accounts, including precious metals portfolios, focused on mining stocks. But the key is to get out of U.S. assets, out of U.S. stocks, out of U.S. bonds, diversified globally to protect your purchasing power and to participate in the overseas growth that is going to uh, occur as a result of de-dollarization. As the dollar loses its reserve status, that is a massive weight that's lifted from the world. The world no longer has to subsidize the U.S. economy, which means those resources can be used more productively to grow their own economies. And I think as an investor, you want to profit from that. And people, of course, should listen to my podcast at shiftradio.com and on my YouTube channel, Peter Schiff, and on Shift Gold. And follow me on social media. Follow me on X. I'm constantly putting my thoughts out on X. So make sure that you follow me and then share my posts with your friends.
Amazing. Peter, thank you so much for your time.
All right, take care.